China should cut its losses in the trade war by conceding defeat to Donald Trump. Xi Miao writes that China is running out of retaliatory tariffs against the U.S. and has watched other major parties like the EU and Japan close ranks against it. Before the trade war gets more severe, Beijing's leaders should seek direct talks with Trump and may have to swallow their pride. Some serious discussions are going on in China as the country faces an escalating trade war with the United States, slowing domestic growth and increasing investment restrictions in the U.S. and Europe. There seems to be recognition that the previous playbook drafted by hardliners has not worked and Beijing needs to change its strategy. Beijing's strategy of tit-for-tat retaliation over tariffs has clearly failed. In fact, this strategy escalated the conflict. The direct retaliation after the U.S. announced the first batch of 25% tariffs on U.S. $50 billion in Chinese goods, with the increase from US $4 billion just finalized and coming into effect on August 23, brought few benefits for China. If anything, it gave the U.S. an excuse to plan for a new batch of tariffs covering US $00 billion in Chinese goods. To be fair, it is possible that the U.S. would have escalated the conflict even if China had not retaliated, but whatever the case may be, China's strategy did not work. On the evening of August 3, Beijing decided to implement differentiated tariffs over US $60 billion in U.S. exports, and on August 8 released a list of an additional US $6 billion worth of American goods to hit with tariffs. Beijing is nearing its tariff retaliation limit. It was rumored that Beijing had been trying to line up with the Europeans as well as other nations to fend off the tariff threat from the U.S., but it seems this strategy is not working either. On July 26, after European Commission President Jean-Claude Juncker's visit to Washington, the EU and the U.S. reached an agreement on trade. It is true that the joint statement itself is vague and does not mean the trade troubles between the EU and the U.S. are wholly resolved. But in the eyes of Chinese observers, this significantly reduced the chance that the Europeans would join forces with China. In fact, European Council President Donald Tusk tweeted that America and the EU are best friends. He was echoed by the Vice President of the European Commission, Frans Timmermans, who tweeted, "Europeans and Americans are bound by history and their shared values." The development is alarming for Chinese observers, as they fear that China is being left behind and is under siege. Trade progress or deals have also been made elsewhere. On July 16, Japan and the EU signed the largest free trade agreement ever. Trade officials from the U.S. and Japan are also meeting this week. It was also reported that Mexican officials expressed optimism about NAFTA deal soon. U.S. President Donald Trump has even talked about the possibility of meeting with Iranian leaders on a no-precondition basis. It seems that China is the only major country that is not making any progress. Although there is still a chance that the Trump administration will start hitting other countries with tariffs again, once more giving China hope of allying with these other nations, it is clear that they are unlikely to stand with China on other fronts. For example, it is reported that from Berlin to London, the Europeans are tightening their scrutiny over Chinese investments in the name of national security, a move following U.S. footsteps. This setback has caused heated discussions domestically. People in academia, think tanks, and the finance industry are concerned about China's policy directions, not only in its recent dealings with the U.S. about trade, but also the overall trend over the past few years. There are increasing voices that China's gain from the reform and opening up policies of the past 40 years were because China has become integrated into a global economic system run by the U.S. and its allies. It is inappropriate, or at least premature, to send signals, intentionally or not, that China is about to build a new system to replace the existing one. China is still far from prepared for an economic confrontation with the U.S. because China is much more dependent on U.S. demand, and the other way around, and it would only hurt itself if it were to take a hardline stance. Instead, China should be more focused on its own development and reforming the domestic economy. It is possible that there were miscalculations several months ago when Beijing came up with a strategy of tit-for-tat retaliation, either because it underestimated Trump's determination on trade policies, or because it underestimated the Washington establishment's rising anti-China sentiments. By now, everybody in Beijing should have figured out how tough the situation is. Thus, Beijing has started to change its strategy. devising a whole new playbook will be tough. Over the past month, Beijing has been busy coming up with policies to insulate the domestic economy from external uncertainties. Monetary policy was the first to adjust, and since late June all the policies are quickly moving towards easing. The so-called policy dispute between the People's Bank of China and the Ministry of Finance lasted for no more than 2 weeks, as the top leaders urged fiscal policy to be more proactive and requested stability on all fronts in the communiqué after the Politburo meeting on July 31st. Eventually, Beijing still has to convince the Americans to come back to the negotiating table, just as Europe, Japan, and Mexico are doing. However, at this point it is unclear how or when this would happen. Last week, some reports said that private talks were still going on between Chinese Vice Premier Liu He and U.S. Treasury Secretary Steven Mnuchin to find ways to restart the dialogue. But soon after, it was reported that the U.S. had proposed raising its tariffs on the $0 billion in Chinese goods from 10% to 25%. This development reveals the problems Beijing struggles with when thinking about the new playbook. First, even if Beijing is willing to talk and make concessions, it is uncertain whether the U.S. will accept and stick to them. If the U.S. is more aggressive, even if Beijing does nothing, how can the Chinese be sure the U.S. will not bully them further if they throw in the towel first? Second, Beijing probably realizes discussions with cabinet members such as Mnuchin are not effective because the conversations do not yield any meaningful outcome. It is much more effective to talk to Trump, as others, such as the EU, have shown by reaching deals with him. To get out of this predicament, Beijing probably needs to deal with Trump directly, figure out what he needs to declare a win and create conditions for that. Of course, allowing Trump to declare victory might be tough and even embarrassing for Beijing, but sometimes it is the best choice to stop losses in one trade and hope to profit at another time. Will the trade war force China to fold? The U.S. confidence may be misguided. Neil Kimberly says though the Trump administration has shown no signs of doubt that it has a superior position in the trade war, a closer look shows why China is unlikely and perhaps unable to back down, so both sides need to come back to negotiations. There is speculation in Washington that the Trump administration will raise tariffs on $0 billion of Chinese imports to 25% from 10%. Upping the ante again in an ongoing trade war poker game. Washington's raising of the stakes suggests the White House feels it is holding a winning hand. Or is it just bluffing? Washington seems convinced that tariffs are the trade dispute equivalent of royal flush. Tariffs are working far better than anyone ever anticipated. China market has dropped 27% in last 4 months, and they are talking to us, Trump tweeted on Saturday, adding that our market is stronger than ever. Washington's strategy is clear. As U.S. Commerce Secretary Wilbur Ross told the Fox Business Network on Thursday, the deployment of tariffs is intended to try and convince the Chinese to modify their behavior, and that the United States has to create a situation where it is more painful for them to continue their bad practices, and it is to reform them. That Beijing would reject the idea that China is applying bad practices wasn't something Ross addressed. Equally forthright, speaking on Friday. On the same network, U.S. National Economic Council Director Larry Kudlow didn't seem too concerned about the suggestion that Beijing could itself impose new tariffs on another $60 billion of U.S. goods, and argued that China is increasingly isolated with a weak economy. But is U.S. confidence misplaced? Investment research firm T.S. Lombard feels China is holding a strong set of cards, publishing Trade War, Why China Won't Surrender on August 2nd. T.S. Lombard's China Watch team feels that the impact of Trump's trade war on China's economic growth will be manageable, with Beijing having rolled out a series of limited measures to sustain domestic growth, and with its currency policy aimed partly at offsetting the impact of U.S. tariffs on Chinese exporters. Indeed, if Trump imposes additional tariffs on $0 billion of imports from China, then further yuan depreciation is likely, T.S. Lombard feels. Analysts at Citibank in Hong Kong, writing on August 2nd, while acknowledging that an increase in U.S. tariffs on Chinese goods to 25% from 10% could negatively affect China's gross domestic product growth, also argued that those tariffs will have negative consequences for the U.S. Given China exports mostly consumer goods to the U.S. Consumer Price Index inflation would likely rise, and U.S. multinational corporations' profitability using China as an export platform would start to be affected as well, the U.S. firm wrote, estimating such an impact would likely start to show more prominently leading to the U.S. midterm election in November. Yet Ross seemed unconcerned in last Thursday's interview. 25% on us $0 billion, if it comes to pass, is US $50 billion a year. US $50 billion on an US $8 trillion or so economy is 0.3%. It is not something that is going to be cataclysmic, Ross said. Beijing blames trade war on US fears over unprecedented opponent. Washington's hegemony-dominated mindset has led to a misunderstanding over China's rise, Communist Party mouthpiece says. Beijing says the spiraling trade war with Washington is being driven by U.S. fears over China challenging its global hegemony, and has rejected criticism that Chinese overconfidence is fanning the tensions. The message was delivered in a commentary in Communist Party mouthpiece People's Daily on Friday, indicating the top leadership has thinking on the dispute as they gather at coastal resort Baidaya for an annual closed-door meeting to discuss domestic and foreign policies, including the trade war. Taking aim at ambiguous opinions popular online that Beijing should cave into Washington to avoid any escalation in the trade war, the piece said countering any country that could threaten U.S. dominance was part of Washington's long-term strategy. It gave the examples of the Soviet Union and Japan, saying the same strategy had been used against them, and that the U.S. now saw China, with its rapid economic growth and increasing global influence, as an unprecedented opponent. No matter what China does, in the eyes of the United States, China's development has already damaged the supremacy of the U.S., the commentary said. To tackle such an opponent, the U.S. must adopt two methods. The first is to use the opponent for motivation, and to drum up mass political support for making America great again, and the second is to contain the opponent's supremacy at every level. China and the U.S. have been locked in a tit-for-tat trade war since early last month that has shown no sign of abating. Beijing unveiled its latest retaliatory tariffs on $6 billion of American goods on Wednesday, matching Washington's move to slap 25% duties on the same value of Chinese imports. Beijing has repeatedly said it has been forced to react to Washington's provocations, but there is growing criticism that exaggerated claims about the country's strength and achievements from its propaganda machine have exacerbated the situation and hardened the U.S. stance. As part of a wider kickback against that propaganda, the president of Tsinghua University was even urged to sack leading academic Yuan Gang, whose controversial claims include suggesting China has already overtaken the U.S. as a world leader in terms of its economic and technological power in an open letter from alumni. So for some, China is to blame because it is too confident and high-profile, so it has incurred a 1-2 punch from the United States. Others criticize, saying China shouldn't strike back, the commentary said. The meaning is that as long as China caves in, the United States will raise its hands high in mercy, and the China-U.S. trade war won't happen. It went on to say that Washington's hegemony-dominated mindset had led to a misunderstanding over China's rise, and to its long-term strategy to contain Beijing in order to maintain its absolute advantage. Once China's development is exceeding or derailing, there will be more curbs and China will be qualified to be the opponent of the U.S., it said. This is more prominent now as China speeds up its development. Beijing has said it is ready to impose tariffs on U.S. $60 billion of American products if U.S. President Donald Trump, who has accused China of amassing a huge trade surplus through unfair trade practices, goes ahead with plans to slap extra duties on us $0 billion of Chinese goods. Sources said that although the two sides had held unofficial talks to try to de-escalate the tensions, the efforts were hampered by a lack of trust. Chinese observers said that with formal talks at a standstill, it was unlikely Beijing would take a step back from the dispute in the near future. To China, this is more than a simple trade war. This is a war between protectionism and globalization, and Beijing has to, and will, defend free trade. So this trade war goes beyond China and the United States. It is about the global economy, said Wei Jianguo, former vice commerce minister. This is going to be a long war no matter whether it is Trump or someone else in office.